All right. Hey everyone, welcome back. Today we're taking a deep dive into something that's been generating a lot of buzz. Preferred stock.
Yeah, this is a really interesting one.
It seems like a lot of you out there are looking for more info on this unique type of investment. So we've got a fantastic explainer here that's going to help us break it down.
Absolutely. Should be a good one.
We're going to explore what sets preferred stock apart from other investments, who it might be a good fit for, and just, generally how it stacks up against some other options out there. And get this, just to pique your interest. Preferred stock is kind of like a hybrid, borrowing a little from stocks and a little from bonds.
It's a very unique place that it occupies in the investment world.
Yeah, and that's what makes it so intriguing. But before we get ahead of ourselves, let's start with the basics.
Sounds good.
So this explainer kicks things off by defining preferred stock as, and I'm paraphrasing here, a special kind of share that kind of blends, elements of both stocks and bonds.
Yeah, that's a good way to put it.
And one thing that immediately caught my eye, and I bet it'll catch yours too, especially if you're someone who's looking for that steady income, is the fixed dividend aspect of preferred stock.
Definitely, yeah. If you are looking for stable income, those fixed dividends can be a real draw. And that's one of the things that really sets preferred stock apart. I mean, unlike common stock, where dividends can kind of fluctuate, go up and down with the company's performance, preferred stock guarantees a set payment.
Ah, I see. So, regardless of how the company is doing, you're still getting that fixed payout. That's pretty reassuring, especially in a volatile market.
Exactly. And not only is it fixed, but it's also paid out before any dividends to common stockholders.
Oh, interesting. So even if a company's profits are a little shaky, preferred stockholders still get their cut first. So it sounds like preferred stockholders get a little bit of priority treatment. What happens, though, in a worst-case scenario, like if a company's really struggling and maybe even facing bankruptcy?
That's where the priority and bankruptcy feature comes in.
Okay, so walk me through this.
Well, it's not the most pleasant thing to think about, but it's important to understand. Imagine, think of it like a lifeboat on the Titanic.
Oh, okay, I like that analogy.
Debt holders, they get the first lifeboat right.
Right.
Then come the preferred stockholders, and finally, bringing up the rear are the common stockholders. Now, hopefully, the ship never sinks, but it's good to know you've got a little extra layer of security there.
Yeah, absolutely. Better to be prepared, right?
Exactly. Especially, you think about it, in today's market, things can be so unpredictable. So having that extra level of protection, knowing you have a better chance of getting at least some of your investment back if things go south, it's pretty valuable.
No, that makes a lot of sense. So, it seems like with preferred stock, you're kind of trading off some of the potential for super high growth that you might get with common stock, but you're gaining that stability and security.
Right, you're trading off some potential upside for less risk.
Now, this explainer also mentioned something about a trade-off with voting rights. Can you explain what that's all about?
Sure, so typically preferred stockholders, they don't get to vote on company decisions like common shareholders do. That's part of the deal. You get that steady income, that priority and bankruptcy, but you give up a little bit of that control.
So is it like a strict rule that preferred stock never comes with voting rights?
Usually, yeah, but there can be exceptions. It's not super common, but some companies might offer limited voting rights to preferred stockholders under certain circumstances.
Got it. It's kind of like a balancing act, isn't it? Steady income versus active participation in company decisions. Now, this convertible option, this is something that really piqued my interest. Why would an investor be attracted to this feature? What's the appeal?
Yeah, the convertible option can be pretty appealing. So some preferred stock comes with this option to convert your shares into common stock.
Okay, and why would someone want to do that?
Well, let's say the company is killing it, right? They're doing amazingly well. The value of their common stock starts to shoot up. As a preferred stockholder with that convertible option, you've got the power to basically jump ship, convert your shares into common stock, and potentially, ride that wave of growth.
So it's like having your cake and eating it too.
Yeah.
You get that stability of the preferred stock, but you also have that potential for bigger gains if a company really takes off.
Exactly. It's like a built-in safety net with a growth kicker.
I love it. Okay, so we've talked a lot about the theory behind preferred stock, but can we get a little more concrete? Can we see how this all works in a real-world scenario?
For sure. The source actually provides a pretty clear example using, let's say, a company called XYZ Company.
Perfect. Let's use that.
So XYZ Company decides to issue both common and preferred stock.
Okay, so they've got both types of stock out there.
Right. And let's say they end up making a profit. Now, before they can distribute any of those profits to the common stockholders, they've got to pay those fixed dividends to the preferred stockholders.
Right, because preferred stockholders get paid first.
Exactly. So let's say those preferred dividends are, 10 per share every year. That's what XYZ company has to pay out before common stockholders get anything.
I'm starting to see the appeal here. No matter what happens, you're getting that steady euro row per share.
And that's just in a profitable year. Let's flip the script and imagine XYZ company isn't doing so hot. Maybe they're even facing losses or having to, shut down completely.
Oh, okay, so back to the Titanic scenario.
Exactly. Even in this worst-case situation, the preferred stockholders, they still get their invested capital back before the common stockholders see a penny. Though, like we talked about, the debt holders are always first in line.
So even when things are bad, you're still in a better position than those common stockholders. Okay, so let's bring this all home. Why would someone listening to this right now consider adding preferred stock to their portfolio? What makes it stand out as a good investment?
I mean, it really boils down to your individual financial goals and, how much risk you're comfortable with. Are you someone who prioritizes a steady, predictable income stream?
Right, because that fixed dividend can be a big plus.
Absolutely. And if you think about where preferred stock sits on the risk spectrum, it kind of occupies that sweet spot between bonds, which are super low risk, low reward, and common stocks, which can be much more volatile.
Higher risk, but higher potential rewards.
Right. So preferred stock kind of offers a balance. You get some of that security, but you're not completely missing out on the potential for growth, especially if you go with a convertible option.
I see. So it's kind of like the best of both worlds. Now, I'm just trying to imagine different scenarios where preferred stock might be a good fit. Let's say you're someone who's nearing retirement and you're looking for a way to supplement your savings with some reliable income. Could preferred stock be a good option in that case?
It could be, yeah. Definitely something to consider.
Because you're getting that consistent payout. Or maybe you're a younger investor and you're looking for some growth, but you don't want to go all in on the roller coaster of the stock market. Could preferred stock, maybe with that convertible option, be a good way to kind of dip your toes in?
Yeah, that's another scenario where it could make a lot of sense. And, there are a lot of other situations where preferred stock could be a good fit. It really depends on the individual circumstances and their specific investment goals.
That's a great point. There's no one-size-fits-all approach to investing. Everyone's got to figure out what works best for them.
Exactly.
But overall, I think we can safely say that preferred stock offers a pretty compelling combination of features.
For sure. It gives you that steady income and priority payment like bonds, but it also has the potential for growth like stocks. It really is like a hybrid investment.
Exactly. So there you have it, folks, our deep dive into the world of preferred stock. We've covered a lot of ground today, from the basics to some real-world examples, and I hope you found it informative and, maybe even a little bit inspiring.
Absolutely.
Now, before we wrap things up, I want to leave you with a little something to think about. We've talked about how preferred stock offers that nice balance of stability and growth potential. But what about the tax implications? How are those dividends taxed compared to, let's say, interest income from bonds or capital gains from common stock? That's something I'd encourage you to explore further as you continue your investment journey.
That's a great point. Understanding the tax implications is crucial when making any investment decisions.
Absolutely. Well, on that note, we'll wrap things up here. Thanks for tuning in, everyone.
And remember, keep learning, keep asking questions, and most importantly, keep investing in your financial future.
See you next time.
Take care.